Welcome to the Ferrari Financial Market News Summary. Stocks had a bit of a bumpy ride this week again, with a dip on Wednesday, renewing fears on the economy. But the market managed to pull things together quite nicely by the end of the week, producing quite a nice rally and ending the week higher. Investors were heartened by the new inflation data out on Friday and started buying stocks again ahead of next week's rush of earnings reports. The Dow Industrials had their 11th straight advance in 12 sessions, and the Producer Price Index, which was flat for March, certainly helped support the market on Friday. But it will be the Consumer Price Index due out next week which will be under scrutiny, as the present inflation level is a little higher than investors would really want. Let's take a look at this week's market chart analysis, get an idea of where the market may be headed in the next week or so.
So looking at the long-term 3-year chart for the Nasdaq Composite Index, we can see the trend that has formed over the last 2.5 to 3 years. And if I draw the long-term trend line through the main points, it looks something like this. Let's fix that on the chart. Here we go. Now, you can see that the trend has in fact returned a number of times over the last 3 years. And even though we've experienced a good rally over this last 9 months or so, we are at a crucial point here. The problem is to decide whether this is a consolidation that's going on, or whether in fact the high that we had about 5 weeks ago, and then the sudden drop due to the Russian unravelling of their stock market, which also occurred on very high volume. If you can see this volume spike down here, that sell-off occurred on very high volume, which is significant. Also significant, we feel, is the fact that the rally over the last 5 weeks here has been accompanied by a decreasing amount of volume. Can you see how the volume at this point here has in fact steadily decreased, and in fact has only just increased to normal levels again during this last week, indicating that we may be approaching another sell-off time. Therefore we feel that a prudent small short position in the overall index tracker stock may prove to be a good short-term play at this point, as probably next week, if the earnings, the slew of earnings results due to come out next week don't prove to be uplifting for the market, we could quite easily see another sell-off from this point. This could mean that simply the consolidation is continuing, or in fact that the idea that this is a medium-term top, that this medium-term top is in fact forming, and we're liable to see a downturn again in the next month or so. We'll keep you posted.
So that concludes our chart analysis for this week. We're nearly touching that stubborn resistance point at 2,500 for the Nasdaq Composite Index, so a small short position in the market tracker stock QQQQ could be well advised. That's it for this week, so tune in again next week, and until then it's goodbye from London.